The following is a presentation of TFNN, The Trader's Edge, with your host, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the February 19th Terrific Tuesday edition of today's Opening Bell on the Trader's Edge. I hope everybody had a great weekend out there. For some of us, we had a 4-day weekend, and that certainly was nice. It is great to be back with you. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today, folks. And my outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life, because leading an inspired life, folks, that is what it's all about. So let's go take a look at one of our tools. This is the tool that I call the Universal Quest. Now, George Leonard, in his book Mastery, he talks about enjoying the plateau. You know, and so often we find ourselves racing to get ahead, thinking so much about our next achievement that we can't appreciate the time in between. And at times, folks, we even maybe lose some motivation. You know, it's really all about happiness, and happiness is not in the getting. Happiness, folks, is in the becoming. And happiness, it's most certainly a universal quest. Happiness, folks, is both the joy of discovery and the joy of knowing. Think about it. You know, it's the result of the awareness of just simply that full range of life that each of us can live, that each of us can share. It's the joy that comes from designing a life that is full of dreams and goals out there. You know, how about experiences? Maybe just harmonies. How about the harmonies of the market? Folks, it's the joy that comes from designing a life where you can just simply practice that fine art of living well. Happiness, folks, it's quite often found in having options. You know, options of doing what it is that we want to do instead of doing what it is that we have to do. I believe that happiness that each of us are searching for in the future, well, folks, it must be found today. And I mean today, right now today. What I want you to do, folks, is I want you to be able to take time to enjoy the plateau. I will tell you, I'm not asking you to do something that I wouldn't do. I'm doing that right here, right now. Why? Because I've discovered a trading system that is so easy, I can teach anyone out there. Doesn't matter what level of technical skill. It is so visual. It is so easy to see. And folks, that's something that's really been in front of us all along. I've developed some other tools that I'm going to be able to teach you. I've back tested it. I've front tested it. It's been tested all around. In fact, been using this since September the 14th. I unveiled the tools to my subscribers in a workshop, a 1-hour workshop on September the 12th out there. And as I started taking a look at it, I was like, something to think about. Instead of something to think about, something to go ahead and put in action out there. Now, since September 14th, on just this one vehicle that I'm going to be teaching folks how to use so that they can actually see the patterns out there, it's produced a 53% return. 53%. That's on 23 trades. That's using Steve-O's 1% risk rule out there. It's 1% risk. And that's the type. And then I went ahead and back tested it. Spent a little bit of time over the weekend going ahead and, well, certainly getting ready for tomorrow's workshop where I'm going to unveil all this. I'm going to teach you the step-by-step process. It's so visual. You'll have everything to go along with it. And I went ahead and had some time, went ahead and back tested. Went back a few more months, went back to July 12th. So I went back, in essence, another 60 days in that 60-day time period, taking each and every trade out there. That produced an 83% return on 32 trades. No, it's not too good to be true. This is something that you absolutely have to see. Well, you don't have to. I would like you to want to be able to see this. I would like you to be able to open up your eyes, because then maybe you could join me on that plateau. So that is what I'm going to be sharing tomorrow evening from 6:30 to 7:30. And it's the same pattern, folks. It's the same pattern that called the top in 1929. It called the top in 1987. It called the dot-com bubble top out there. How about the top in 2007? Absolutely called that as well. How about the top? How about the low in 2009? Absolutely, it was there. Maybe how about the Apple top? How about the Chipotle top out there? It did. How about the top in 2011 and the bottom in 2012? All sitting there right in front of us. It's absolutely amazing. I want to be able to share that with you. And all you have to do is just simply go to, it's for all of my subscribers. It's very easy to become a subscriber. Just go to, take a look on the home page. You'll see my name down towards the middle section. Click on that. That's one way to do it. The Trader's Edge Show. That'll walk you through it. You can go under the newsletter tab on the homepage of TFNN.com. That's another way. Just look under trading newsletters. And it doesn't matter whether you're you've never subscribed, you're a past subscriber. There is a way for you to be able to do it. It comes with an unconditional money back guarantee out there, and it'll absolutely blow you away. There is no reason, folks, to not take advantage of this 1 hour workshop. Again, it's tomorrow night from 6:30 to 7:30. Even if you can't be there, as you know, it'll be archived on your members page. So it was a great weekend out there. Hope you had a great weekend, and I can't wait for tomorrow night. Let's go take a look at these markets. Relatively flat market out here with the U.S. markets being closed yesterday. The biggest thing going on inside the markets here right now, we'll take a look at it, is over in Germany. The DAX off to a it's not October. It must be February Fest that they're having over there. You've got the DAX up 92 points. That's about 1 2/10%. They are celebrating because I guess the sentiment is better than what was expected. Of course, if you took a look at those numbers, you'd say sentiment is still pretty darn negative over there. But you wouldn't know that by taking a look at the price movement in the DAX. Of course, we'll go take a look at it and see what it actually means, if anything, from a chart standpoint. Again, up 92 points right now. The FTSE is up 31 points. That's about a 0.5%. Over in Asia last night, it was Debbie Downer over there. You had the Nikkei off 35 points. Of course, that's not so bad considering the Nikkei is up so much. The Shanghai was down 40 points out there. That was off 1.5%. And the Hang Seng off a full percentage point, off 238 points. Our call-in number, as always, is 877-927-6648. If you are listening to us on the radio, or maybe you're using TFNN.mobi, remember, you can always catch the live stream of this show here. Go to the homepage of TFNN.com. Over on the right-hand side, you'll see the little area. It's got 3 little smart phone devices out there. Just click on that. You'll be able to catch the live stream of the show. And as always, this show is archived on Channel 9. Of course, the big news on Friday here was the movement that we were taking a look at in the commodities marketplace right now. Gold is down 50 cents, trading out at 16.09. It's on its way down to 15.84, more likely 15.26. And that's really the first pattern that we're going to start off with here on Tiger TV. Silver is flat. It's flat. It's trading out at 29.83. Light sweet crude is off 21 cents this morning. It's trading out at 95.61 out there. High-grade copper is back just a tad, and you do have natural gas trading up about 8 cents. So let's start off by taking a look at gold. If we do take a look at gold, just simply coming from our swing point low, the swing point low that I'm using is and I'm looking at the continuous contract here in gold. I'm going back to the most recent swing point low, which would be May 16, 2012. If we go from that low, which is 1526.70, all the way up to the high that was put in on October the 5th, that level at 1798. From that low to that high out there, the 0.786 level is 1584.80. Now, those of you that have been listening long enough, you can see this little, I'm going to blow it up on the screen here. We're going to take a look. You see A to B, the gold off of the highs made a 1-to-1 A to B equals CD down. And as it did that, you had gold that had moved down into the oversold territory. In fact, made a little nice hammer, Stevie hammer candle on January the 4th out there. That low was 1626. What we know about a hammer is once you break a hammer, if you're long, you're absolutely wrong on the trade out there. It's why you want to be able to identify certain candlestick patterns because they are reversals. Some are better areas of support and or resistance out here. In this case here on a hammer, you're looking at a support level, and that was busted. It was busted with conviction on Friday. Now, the other pattern, I'll blow this up on the screen here, that we're taking a look at. It is a 0.786 Gartley buy pattern. That Gartley buy pattern, as you know, as I've told you, the majority of the times, and I have looked at literally thousands and thousands and thousands of Gartley or butterfly patterns out there. And what I noticed, one of the patterns that I noticed out there is that when a 0.786 Gartley pattern fails, it turns into a butterfly. I will say it often, high probability that it turns into a butterfly out there. We had the 0.786 Gartley buy pattern complete here on the 12th of February, right around the 16. In fact, the low was 1639.50. Looks like 1639.90 was really my projected area. So maybe you can cut me just about a 40-cent slack out there. And what you had also is you had some really nice Fibonacci numbers coming together. You had an expansion of your B to C swing point. That was 1.272. Expansion at a 0.786. That should have been a strong area of support. And it wasn't. And now what do we have unfolding? We'll go ahead and erase this pattern here, and now we'll draw in the butterfly pattern. And for those of you that don't have the tool to be able to draw this pattern, one of the things that you can most certainly do, most all packages have Fibonacci expansion numbers. Just come back to the swing point here, the hammer low. That hammer low is the 1626 level. So you'd come from that hot low all the way up to the high that was put in here, most recent high, January 17th. That high, 1697.80. What you will see is the 1.272. That would be a butterfly pattern. I can draw that in there. That was the 1606 level. Well, that was achieved. And it was achieved and beyond. And what we can also do is if I scrunch this, not that scrunch is necessarily a word out there, it is when it comes to Stevie stock charting. If we scrunch that down, what we'll see is a 1.618 expansion, which is at the 15, looks like about 1582 out there, coming right in at that 0.786 retracement and where we started it off that larger pattern at 1584. That is where gold is headed to first. If it busts that area, it'll go back and it'll make a 100% move of a move at least and take it down to the 1526 level. What has been interesting here is the law of relativity isn't working because you got gold trading lower and our markets have been flat to higher. 877-927-6648. I mean the stock markets. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks. Welcome back. 877-927-6648 in the pre-markets here. We got Office Max, Staples, and Office Depot all trading up. Rumors that Office Max and Office Depot are taking a look at combining efforts, trying to go after Staples. They're all up here in the pre-market. You got Office Max, OMX is their ticker symbol. They're up the largest dollar-wise so much in so far in pre-market trading. 1075 is what they closed at on Friday, trading out. Last trade just fired off at 1356. Staples not behaving too badly as well. SPLS is their ticker symbol. They closed at 1295. Their last trade fired off at 1494 out there. At Office Depot, ODP is the ticker symbol. They closed at 459. They're trading out at $6.07. Those are the leaders to the upside. Apple as well trading up. They closed at 460. Last trade fired off at 461.75. No great shakes out there. Humana Corp, though, leading things down this morning. They closed at 77.99. Last trade firing off at 69.81 out there. Cigna Corp, CI, they closed at 61.08. They're trading at 57.01. United Health here closed at 57.32. They're trading down to the 54.13 mark. Las Vegas Sands, LVS, they close at 52.90. Trading down slightly out at 51.80 out there. And if we go back to Tiger TV real quickly here, you can see the blue shaded butterfly. That is the next level that gold is headed to, that 1581-ish, 82 level out there. And if you don't see any bullish candles, says that gold will travel lower. And I suspect that gold will travel lower, and it will go all the way back to the lows, which would be a potential nice buying opportunity out here. If we take a look at those lows, these are the lows really that were established the first time down. That was back on September 23rd out at the 1631 level. So if I just go ahead and put this across the screen, we put a nice black line. We can see that so far we have had two tests of that area. If gold could get back down there, that would be one additional test. And that is really setting up a strong area of support, and that is on gold. If we go take a look at the DAX, since that is moving the most here in the markets, in the pre-market here. Well, it's not the pre-market for the DAX. They've been trading here for a while, trading up at 95.78. Of course, the DAX came down hard, made a 0.382 retracement. What I'm referring to there is I'm going to the lows in the DAX off of November 16th, those lows being 69.50, 53, all the way to the high that was established here as it moved towards that over bought territory on January 28th, 78.71, did what is natural. If you take a look at any type of retracement, you'll know that that first retracement level is going to be in that 0.382 area. That would have been 75.20 on the trading session of February 6th. You had the DAX get down to the 75.37 mark, so close enough for all kinds of work out there. Now what we're getting here is just simply a bounce, a little counter trend rally. It looks like if we go from the high that was established back on January 28th down to the low, we'll go ahead and put this one in blackout here. What we can see is that the DAX already had jumped up into that 0.618 level on February the 13th out there as it did a retracement. Now it's just of the smaller move here. Did a retracement getting down to the, the high there was 77.37. The actual 0.618 would have been 77.41. So we could be seeing a Gartley sell pattern actually set up here in the DAX. You say, what does that look like, Steve? I'm glad you asked. We'll just take a look at the A point here coming off of the low in the DAX would be the February 6th level, 75.37. That'd be your A point. Your B point would be the high that came in on February 13th. That is that's the 0.6, the first 0.618 retracement out there, 77.37, and the pullback into a Friday. The low that was established here at the 75.68 level. You can see just simply a 1-to-1 A to B equals CD would take you up to 77.68, kind of gets you right in between the plateaus of the elevator there, between sweet 618 and we'll call it sweet 786 as well. 7,821. I suspect with this wide-ranging bar that we are seeing here in the DAX today, that 7,800.21 is the likely target. If we take a look at that, we draw that little Gartley pattern in here, and it will all be about the bulls and bears telling us whether or not that is the pattern that is going to complete out there, because we'll see bullish signs because they just simply cannot hide, folks. So it looks like 7,800.15, 0.21, somewhere right around there with the DAX, and that is based on today's wide-ranging bar out there. Let's go take a look at the FTSE here, since that is on the move. The FTSE here, which has been really the strength over in Europe, you can see the FTSE trying to tackle its highs again. Those highs being the February 13th level, trading inside that candle. I don't have volume, but it looks like it will probably try to tag the top, 63.84.70, trading out at 63.56.21. Futures relatively flat. Looks like Dow will open up maybe about 10 points. We'll be right back, folks.
Yeah, it's always better when we're together.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at 63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at 66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
And we're up to the races. We got the Dow up 81 points. Everybody's still in the stables. Well, you got the S&P up 3 right now. They're leading the charge here. The composite up about 5 points. Russell 2000 up 2 points. New York Stock Exchange up 23 points right now. NDX up 6. And if we go take a look at the currency market here, we're looking at the euro US dollar. You do have the king dollar up about 5 ticks right now. We're going to start off taking a look at, the lady in the basket of currencies, and that is the euro. I've got the 30-minute chart up on my screen if you're following along on TigerTV. We can see here about the euro really hasn't moved, got into the really extreme oversold territory way back as it was making some lows back in the 6, 7, 8 o'clock time frame on February the 14th out there. And what we can see, in order to work that off, in order to work off a overbought or an oversold condition, it needs to just simply move sideways. It did that as it made its way up and did a little retracement here towards what now is setting up a consolidation range. And this consolidation range really setting itself up at about 5 a.m. on February the 14th out here. That is the black horizontal lines going across my screen. Looks like the top of that range really being right around the 133.781 mark. Right now, the euro neither overbought nor oversold. What we do know about consolidation ranges is they will typically go ahead and resolve themselves in the direction that they came from. In the case of the euro, that means it's just really building energy, building cause for its move lower out here. That is on the 30-minute chart. If we peek in on the daily chart of the euro, you can see here, showing a period of pause. This was on February the 15th with that little doji candle. And doji candles on the way down really don't mean a whole heck of a lot. At least they don't mean a whole heck of a lot to me. They're not even a halfway marker. Just simply was an area of pause. And we've seen that here the last 2 trading sessions. Well, that goes along with the 30-minute chart, just simply showing a period of building cause of moving sideways in a relatively tight trading range out there. If we do take a look at, you did have the euro complete a 1 to 1.618, A to B equals C to up. If we take a look on the daily chart, just the normal retracement out here. Well, you can see what it did was, let's go ahead and put this in black. You can see it made really what's an exact 0.382 retracement. So the first elevator, first floor of the elevator, in this case here on the way down, stops at it, lets people off, moves sideways, just building energy to make its move down to the 0.618 level. That's right around the 130, and just a little bit of a change on the end there. I suspect that is where the euro is headed to at least. Now let's just take a look at the A to B equals CD down pattern that could be setting up here. Your A point on the euro is the February 1st high. Your B point is the low from February 8th, and then the move up through February 13th. 1-to-1 takes you to 131,621, but it's that 1.272 that would set up a Gartley buy pattern at sweet 618, right in that 130, and just a little bit of change out there. So it looks to me like that is where the euro is headed. That will go ahead and put some energy into the king, and that will go ahead and put some weakness into gold, silver, as well as crude oil, all the commodities out there, and should go ahead and put some weakness into the stock markets out here. We'll see how all that plays out. If we go take a look at, Friday's move, those of you that were watching intraday trading out there, I think it was around the 2:30, 3 o'clock time frame. You saw the movement inside the futures marketplace, and all being led really by the some email that was transmitted between a couple of executives at Walmart. So as we take a look at Walmart, see how that is trading here today. Right now, we'll just simply start with the consolidation range. We just looked at a consolidation range on the 30-minute chart on the euro. Here's the consolidation range on Walmart, in Walmart, going back to the dot-com bubble, that December 31st, 1999 high out there, and that high had not been tagged or approached until July of this past year, July 2012. Broke out of that range. It looks like that was a false break to the top side, which is too bad, because on Walmart here, the move of the next move when you have a consolidation ends up being the actual move of the consolidation once you break out of it, either to the upside or to the downside. That should be one of your first ranges, one of your first targets, I should say, when you are trading anything. If you trade a consolidation box, you should be able to identify what that next target is. That way, it helps you to determine your reward to risk on any trade that you would enter out there. That's why it's always good to understand these consolidation patterns. And of course, here in the case of Walmart, that would have set one heck of a nice move higher, but that is not the case out here, as it is broken back inside the consolidation trading range. That would set up at least a move back down into the most recent swing point here, which would be April 30th, 2012, right around $57.18. That's the monthly chart. Now let's go see what the weekly chart tells us here. The weekly chart really setting up an A to B equals CD down. Now the B point on this here on the weekly chart would be your low of November 23rd. That has 34 million shares out there. The price point is 67.65. Last week, with Friday's action, it came down. This was so much of the volume was really just on Friday. Came down with 47 million shares. So you're attacking that low. That says at least 67.65 should be tagged. Had a little shooting star out here on the weekly chart the week of October 19th. That was a reversal signal. You got some follow through the following week. Now what we're taking a look at, I didn't mean to grab that tool. Let's grab the little formation tool, and let's go measure the A to B equals CD pattern out here. That says the 1-to-1, 62.96. Now, where this should really head to, because if you take a look at, there's no real floor building here. The only floor that you can see gets you into about that 0.618 level, 62.96. And that would take me back to a small little floor back here from February the 3rd, those highs being 62.63. So you go from the week of February 3rd through the week of February 17th out there. If we take a look at retracements coming off of the swing point low from May of 2012 all the way up to that little shooting star, we'll see that right at that 0.786 level, 0.7, maybe 62.96. That's where the floor was. Did I say? Yeah. You've got a 0.786 retracement along with that 1-to-1 A to B equals CD. So the weekly chart says 62.41-ish. Let me go back here. What was the monthly chart? Was I giving you as a monthly target here? Oh, I didn't do that, right? Let's go back here to monthly target. The monthly target was taking you all the way back down to the 57 level. That was the April 30th. Let's go take a look at the daily chart here on Walmart. You can see the volume. So much of that volume really being Friday, and not really testing. Not when I say not really, not testing the swing point from November 19th. That's the first area that it needs to plow through. Only 12 million shares down there, and on Friday, twice the volume, 25 million shares. So that's going to be on the daily chart, the next area for it to target and attack. That low 67.65. Once it gets through there, we can see on the daily chart, we can see a breakout. And the breakout in Walmart is this open gap. And this would say on the daily chart, here's where it's headed to. That low is 62.50. Well, the area would be anywhere from a price range of 59.66 to the 61.76 level. And that is, or 61.25 level, and that is the gap that was created on May 17th. So what this is saying to us is just simply on a daily chart, a stock coming back to its breakout levels normal. Now, the volume on Friday is a bit disconcerting, but says that on the daily chart. So we pretty much have the daily, weekly, and monthly lining up with regard to a price range in Walmart, and that is where it is headed to. We go take a look at some of the things that are moving in the marketplace out here. You got Red Robin Group. What is Red Robin Group? The gourmet burgers out there. So let's go take a look at their earnings. They have popped up 17% here just for selling burgers. They must have a pretty good burger out there. They had adjusted net income, $8.3 million. That was 59 cents a share. What was that compared to out here? Net income, 8. Well, that's the second thing I've got here. Let's see here. Total revenue, $6.4 million versus $3 million. So these guys having some explosive growth. Must be a result of new stores that are opening up out there versus same-store growth. I don't see that message. But let's go take a look at the stock chart and see what Red Robin Group is doing. I don't know if we have any Red Robins here in Florida. If we do, we don't have any that I know of in the Tampa area. Of course, I'm not on the lookout for a good burger. In fact, I can't really tell you the last time I had a burger out there. Not that I'm against meat. Just can't tell you the last time I had a burger. But let's go take a look at RRGB, Red Robin Burger Group. Yes, RRBG wasn't there. They had to go with Red Robin Group Burgers, RRGB. So let's go take a look at Red Robin GB Smoky Bones Restaurant. They own Smoky Bones, too? I thought that Smoky Bones was owned by the Red Lobster Group out there. Pretty sure that's the case. So Al and I having a bit of a conversation. I should have included you folks in there. In any event, let's go take a look at Red Robin Group out here. And this is up, on the weekly chart. The daily chart right now taking out a swing point area going back into the March of 2012. But let's go take a look at this. The volume so far today, not too shabby out here. 153,000 shares so far as it clears a swing point area that had 252,000 shares. Let's put this on a weekly chart out here. Go take a look at the weekly chart of Red Robin Group. So we can see this is attacking the last time that it had swing point here where it had a pretty decent downdraft. Takes you back to May of 2008. The sell in May principle back in 2008 was most certainly working here with the Red Robin Group out here. That swing point high is 43.58. Volume there, 2.9 million shares on the weekly chart. That is where it's headed to. Had some volume come off for the highs out there. It had 5.7 million shares come off on the week of May 23rd, 2008 out here. But if it can take out, let's take a look at the monthly chart here. Let's take a look at the monthly chart, see what the monthly chart setup has for us. The monthly chart also coming into that area of congestion and doing it with quite a period of congestion. It looks like a Red Robin Group will probably be stopped in its tracks right around the 43.58 level. So far, the high today, 43.38 out there. That's on Red Robin Group. You've got Google up $6 and change. Office Max is up. Let's go take a look at Office Max. OMX is the ticker symbol. Let's go see what that is trading into out here. Office Max trading out at $13.98, gapping up with some nice volume out here. Okay, let's go see what this is moving into. So it's up and over the downdraft that it had. Had some real problems back in April of 2011, April 28th to be specific, when it gapped down with 16 million shares. Some pretty big selling out there. Ooh, this does not look very good, does it? The highs here back in 2007. So you talk about a equity that is below where the markets are Back in 2007, Office Max was at about the 54 level, 1398, and that's with a nice gap up here this morning. So certainly struggling, and you can see the stock chart suggesting, either a buyout, a merger, acquisition, or something out there in order to help this thing out. Let's go take a look at the monthly chart on this. And the monthly chart says that this should make its way up to the most recent swing point highs, which would be December of 2010. That low is 1664. I suspect that is where Office Max will go ahead and travel to. Let's go take a look at Humana Group. HUM is the ticker symbol. Not really a lot of activity here in the markets. Markets right now still relatively flat. The Dow up 17. The S&P is up 4 right now. So pretty flat market. Let's go take a look at Humana out here. Humana gapping down. I don't see any news behind this here just yet. Let me click on this, see if I got any news. No news here on Humana as it gaps down, and it does it with volume. Now, we can we can garner from this chart out here is taking a look at the high volume gap down low from July 31st, and that is where it is headed to. You had both on July 31st, 11.7 million shares of downside, as well as on the following trading session, 10 million shares. The area was tested, and when I mean the area, price moved down into that level back in the November time frame. Obviously, our markets were making a low on November 16th, and this really has participated with the rally to a certain extent out there, but now coming back and revisiting the high volume low. This also had some additional institutional selling in the equity back on November the 7th out here. The only time we've seen any potential kind of institutional buying, and that level was taken out here this morning, was the February 4th move up with 5.5 million shares out there. So looks like what we've got with Humana is going to come back and it's going to test this little consolidation area. If we just simply on the daily chart draw a line across the screen, that's the black line. You've got a decent low back in August of 2011, right around 68.88. That low was tested and rejected in October of 2011. Got below it back in July as it was making those lows here with volume, and I suspect that that's the area that will be tested, and then it'll try to get back inside that consolidation area. If these lows get taken out in Humana, that would be pretty darn negative. That would be setting up one huge A to B equals CD down, and it could very easily be doing that. Let's go take a look at the weekly chart, though, and we'll draw that pattern in on the weekly chart. Oh, we'll draw it in because it's already drawn in. But let's go. I think we have to raise the bar. The high of June 29th out here was 81.42. The high last week, 81.87. We won't worry about redrawing it too much. Looks like a 1-to-1 A to B equals CD. I suspect even more than that would be 58.73. Looks like 52.50 would be the mark out here. Now, the problem here is going to be right here, this high volume bar sticking out. It's a nasty bar. That is January 22nd. You don't have wide price spread, but you do have volume. That high is $52.66. 877-927. Now we got some movement in the market. Got the Dow's up 35. The S&P is up 6. We'll be right back.
It's always better when we're together. Yeah, it's always better when we're together.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. The Dow up 52 points right now. S&P's up 6, and looks like we've got someone in the den who has eaten a hamburger at the Red Robin. That is, stock is up. It's on fire this morning, up 18%, trading up $6.71. Of course, on fire as well. You've got 3M leading the charge here inside the Dow, dollar-wise on the way up. You've got 3M up 95 cents right now, trading out at 104.18. If we do take a look at 3M on the weekly chart, just go see what it is doing out here. It is up and over its highs. In fact, it has a pretty decent, in fact, I will go ahead and take this back a little bit further. It is truly up and over a strong resistance area, which now becomes support. And if we take a look at the weekly chart, so where I'm going to take you back to, right now my stock chart only goes back, it looks like right now, through the 2005 time frame. So we're just simply going to take a look at the top out here, the triple top that was established here. The first high would be the week of October 12, 2007, $97 even, Steve, and one of Basil's round number highs out there, and then gave us the bearish reversal signal out here. Did that with the following 2 weeks candles out here. That set up a resistance area just simply by using that nomenclature. You then had 3M get back up into that area back in April of 2011. Of course, those highs in the 97 level back in 2007, took it all the way down to the March lows at around $40.84. Makes its way all the way back up into the to that $97 area back in May of 2011. You then have a series of candles that gave you a reversal signal. It did that over a 3-week trading session out there. I'm also going to be teaching that to students inside, subscribers, clients inside tomorrow's workshop. It's another reason for you to want to attend tomorrow's workshop from 6:30 to 7:30. It's going to be an incredible 1 hour. In 1 hour, you will be amazed in how much information in a trading system, an actual trading system, you'll be able to use and take forward and make some really good bread with. So, but you did get a reversal signal up here as well. That created a resistance area, and that was really tested twice. It was tested also back in July of 2011. Well, we can see old resistance becomes new support. So you've had a breakout in 3M, and 3M will be back down to visit that area. Because as we take a look at the volume, we'll take a look at the most recent weekly volume out there. You're looking at 13 million shares. You're looking at 17 million shares. This is the weekly chart, and as it gets up over that level, well, does it on 13, 14? So the weekly chart says, okay, it had some volume going over that level. I think it is the monthly chart here. Let me put back the monthly chart. And the monthly chart is where it was running into a volume issue. No, I do have, that's the weekly. Come on, Steve, click on monthly. M for monthly, yeah. So it's on the monthly chart where we see the issue out here. The monthly chart had 98 million shares back in October of 2007. Also in May of 2011 did 67 million shares. Up and over that was 62 million shares last month. That says that when the markets do pull back, if they ever pull back, and they will, folks, that on 3M, it'll come back and it'll test that area, meaning around the 97 level. Now, this would be similar to the setup that we were taking a look at in Walmart. If it holds this level, comes back and tests $97, does it on lighter volume on a monthly basis out here, says 3M could be making a nice A to B equals CD up. That A to B equals CD up over the long haul in 3M would take it to about $125. Folks, thanks so much for joining me. Remember this, you have an amazing power within yourself, and that power is so strong, it'll create a life of abundance, cure incurable diseases, build billion-dollar businesses, paint magnificent masterpieces, but most of all, create fantastic, loving families. Thanks so much for being a part of the TFNN family. If you're off to start your day, have a great day. Take care, folks.